Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 3rd of March 2024, and yesterday we produced our regular weekly financial and markets update. This is broadly a repeat of that video. So if you listened to yesterday's video, there is no need to listen further to this one, unless of course you wish to pick up some points you may have missed. We saw gold and silver prices rise last week. We saw equity markets varied, with the Dow Jones down but the other bourses higher. And we also saw the oil price rise too. This coming week we have some interesting economic data coming out of the United States which could affect these prices. On that note, we'd better take a look. Some viewers have asked that on this channel we actually place some graphics showing the changes in prices. But one of the reasons we set up Finances Do Matter, which is a channel we recommend you join, is so that you can actually see these figures in real live time. Now, we are duplicating some information on Finances Do Matter that we produce on Illuminati Silver, though there will be a wider range of other financial issues covered there. So once again, if you haven't joined Finances Do Matter, then please click on the link in either the description box or on the comments section below. Looking at gold and silver prices, gold rose $48 last week, rising from $2,035 to $2,083, having hit a high of $2,088 and a low of $2,024, a rise of 2.3%, following the previous week's rise of 1.1%. Now, in our last update, we predicted that gold would trade between 1985 and 2085, which it did comfortably, and settled near the top of that range. There was an upper outlier range of 2,100, though we were doubtful it would get that high, and it didn't. Gold spread between high and low was $64, and this compares with $28 the week before. In sterling terms, gold was up £41 at 1,648, and in euros it was up 41 euros at 1,922 euros. Silver, though it rose, did not perform as well. It rose 18 cents, moving from 22.95 to 23.15, having hit a high of 23.36 and a low of 22.29, a rise of just 0.8%. What is noteworthy, though, is the fact that although silver did close higher, it achieved a lower high and a lower low compared with the previous week. Now, we cannot read too much into that at this stage, it's too soon, but it's worth noting. Last weekend, we forecast that silver would move between $22 and $24, and once again it did this comfortably within the range. The difference between its high and low was $1.07, still quite low, but not as low as the previous week's 95 cents. In sterling terms, silver's up 17p at £18.31, and in euros it's up 0.15 euros at 21.40 euros. The gold to silver ratio rose from 88.7 to 1 to 90 to 1. Bitcoin currently stands at $62,200, a whopping $10,700 rise on the week. It was only a few months ago that Bitcoin stood at $15,000, but we did say, whilst we're not great fans of this cryptocurrency, we did say its halving this year will cause the price to rise, but it looks like it's going to beat its all-time high of just around $69,000 anytime soon. Equities were mixed though. Most exchanges were a little higher. The Dow Jones closed at 39,087, that's down 44 points, but the S&P was up 49 points at 5,137, the Nasdaq Composite up 278 points at 16,274, and the FTSE down 24 points at 7,682. Oils were up. Brent crude up $1.93 at 83.55, and WTI crude up $3.48 at 79.97, both reversing and exceeding the previous week's decline. The dollar index stands down 0.07 points on the week at 103.86. But this is virtually unchanged. Now, last weekend we stated that the gold market is likely to be influenced by key economic reports, most notably the personal consumption expenditures data, which was due on Thursday the 29th of February. Well, true to form, when the data was published, we saw gold rise over $50 an ounce and broadly retained the gain towards closing. The PCE data came in exactly as anticipated, thereby pushing the year-over-year rate down from 2.6% to 2.4%, and the core rate down from 2.9% to 2.8%. Now, although this buoyed markets, one should remember that the underlying fact is that inflation rose in January at the fastest pace for 4 months. The core rate, which does not include food and energy, saw the largest increase for a year. So the market's relief that these figures were not higher should not necessarily be interpreted as good news or very good news on inflation. Once again, we also urge viewers to watch the oil price. Now, in addition to that, announced last week, we saw personal income for January coming in at 1%, compared with expectations of 0.3%, so beware of wage increases affecting the inflation rate, and Friday's manufacturing PMIs were a little lower than anticipated. Interestingly, on Monday, the consumer confidence figures came in over 8 points lower than the markets expected at 106.7. What does this say about US citizens' feeling about their financial futures? Now, this coming week, we have a fair amount of economic data coming out of the US, and so we could again see some excitement in the precious metals arena. On Tuesday, we have the ISM Services PMI for February and factory orders for January. Importantly, Wednesday, ADP employment report for February, with expectations at or around 150,000 new jobs. Thursday, consumer credit for January, markets expecting a figure around $10 billion. And then the most important data on Friday being the non-farm payrolls for February, with expectations of 210,000 new jobs. Remember, last month, an overwhelming 353,000 new jobs were announced. It will be interesting to see if these figures are amended downwards. So where does gold and silver's near future rests? Well, gold has had so far strong support at $2,000 and strong resistance at $2,075, though it did close above this figure on Friday. We have no doubt that gold will prove bullish in 2024, reaching and surpassing all-time highs. Now, save the last 2 years, gold has tended to dip in March to recover again in the following months, but we did see strong price movements in 23 and 22 particularly. A breakout to the upside is being touted by analysts, but some are, in our view, slightly misjudging the PCE figures. On the face of it, at a superficial level, we see inflation falling, but the figures just announced are showing an increase in the underlying rate. So we have a situation whereby analysts are now saying rate cuts in June are now extremely likely, whereas we're not out of the inflation bottleneck quite yet. Now, they could indeed be right, and we certainly do not see rates falling before June, but at the same time, we're not quite as thrilled with the inflation data as others appear to be. Now, that said, our views do not move markets, whereby analysts of large financial institutions do. So we could indeed see gold continue its rise early into next week, to be either supported or checked and corrected by the ADP and non-farm payroll figures announced later in the week. We should also not forget that continuing tensions in the Middle East are also adding a premium to the price of gold, as investors tend to move to safe haven assets during such times. Silver is undoubtedly still consolidating, with strong support at $22 and strong resistance at $23.50. Silver also, for the moment, seems to be particularly tied to the movement in the US dollar value, which suggests for now there appears to be no discernible interest or motivator to move silver higher unless the dollar falls dramatically. We do take the view that silver is, though, relatively cheap, looking forward 12 months or so. but for now it appears to meander when compared with gold. Now, strictly speaking, gold should fall a little next week because, as we've mentioned twice now, we believe the inflation data has been misread. But analysts seem determined to pump the rhetoric right now. So with this in mind, and taking into account a continuation but not escalation of geopolitical tensions, which could have an impact if they do escalate, our forecast for gold is a trading range between $2,025 and $2,125, with $2,000 and $2,150 as outliers. For silver, we're sticking broadly with the same forecast as last week, 22 to 24, with 2150 to 2450 as outliers, though we're expecting silver broadly to operate within the lower range rather than the upper range of that level. But what do you think? Please do share your thoughts below. Thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter, another video coming up on there later today. And meanwhile, we wish you a safe, enjoyable weekend, and perhaps even more so, a prosperous week ahead.